Hello guys, Mike here from the Bull Capital, and today the first lesson we're gonna learn about swings. What are they, how they are being formed, and the type of the swings, because I think this is the first lesson that you should learn about before going forward. And also I think if you understand how swings are created and the type of the type of swings, it will be easier to understand future lessons. So the market moves in swings, swings high and swings low. Okay, and I'm gonna show you what a swing is now. Okay, so the market moves like this. For example, let's say it comes from a lower price, okay, and the price it's increasing, okay, it's going higher. That creates a swing, and the swing it's done. Actually, let me try do like this. Yeah, it creates a swing. I will change the color to yellow. Yeah, it creates a swing high. It starts from a lower price, and somewhere it's gonna stop going higher. At that point, the price it's gonna go down again. Okay, it's gonna go down, it's gonna come lower. When the price stop moving higher, it will start going lower, and this is a swing low. I will change the color for the swing low to orange. And when the price stopped going higher, it formed a peak. Okay, this is called a peak. I will actually write here. Okay, this is a peak. Yeah, great. I will write also here swing high, yellow. Yes, and swing low, gonna mark with orange. Okay, to visualize better. Now at some point the price it's gonna stop going lower, and when it stop, it will start climb again. Okay, going higher, and now it's gonna create another swing high. Okay, change to yellow. It's gonna create another swing high. Now when where the price stopped going lower and started to move higher, it creates a valley. Okay, so this is a valley and this is a peak. Okay, I will actually write here valley. Okay, okay, so this is a valley and this is a peak. Now again the price it's gonna go higher. until at some point, and it's gonna stop again. Okay, and at that point it's gonna create another swing low. And here it formed another peak. Second. Great. Now the price it's gonna stop somewhere for going lower, and it's gonna start going up again, and it's forming another swing high. And now we have the second valley that has been formed here. Okay, so these are the peaks and these are the valleys, and the swings are, we have two types of swings. Okay, swing high and swing low. Swing high, it's the one that it starts from a lower price and stop to a higher price, and the swing low is the one that starts from a higher price and stops to a lower price. These are the peaks, the swings. The swings can have different sizes, or it can be like smaller swings or higher swings. Okay, now it depends on the time frame that you trade, and we're gonna learn about time frames in the next lesson. But swings are actually the same in every time frame. Just the only difference is that on some time frames the swings can take longer, and on other time frames the swings can take less. Okay, now let's learn about the type of swings, because we have swings low and swings high, but there are other types of things that we should look for. I'm gonna make here another drawing. Okay, great. Now we're gonna learn about higher high and higher low. Okay, what that means. So it means actually I need to do a few more swings for you to understand even better, and I will do that just now. Okay, I think it's enough. So what that means, so these are the peaks, yeah, the let me mark them with yellow. Yeah, these are the peaks. Now so we have here the first peak. The second peak, it's higher than the previous peak, and the next peak, it's higher than the previous one. So that's called a higher high. Okay, a higher high. Yeah, means that it created a higher high, a higher peak, higher than the previous peak. Okay, and also this one here, it's higher than the previous one, so that's a higher high. Now let's see what is a lower high. Okay, that means that we have here this swing low, this valley. Okay, this valley I'm gonna refer as valley. Okay, so now first valley, it's as a starting point. Okay, the second valley, it's higher than the previous one, and the next valley, it's higher than the previous one. That's called a lower high. So higher high actually means comes from, it's a swing high, higher than the previous one, and this is a swing low but higher than the previous one. Okay, so what that means, when you see on the chart higher highs and lower highs, when you see higher peaks and higher valleys, okay, it means that the market, it's on an uptrend, means that it goes up, it grows. Okay, and that's a good thing. Okay, that's a healthy market. Now let's talk about lower high and lower low. It's actually the opposite of higher high and lower high. Okay, let me draw here also. Let's stop here. Come on. Okay. Now again, we have these peaks. And we have the valleys of the swings. Okay. Great. Now what we can see here, we see, so this is the a peak. Okay, the starting point, it's the first peak, like, let's say. Okay, the next peak, it's lower than the previous one, and the next one, it's lower than the previous one. That's called a lower high, and we're gonna write here lower high. Why it's lower high? Because it's lower than the previous high. Okay, and here it's a higher high because it's higher than the previous one. Okay, hope it's easy to understand. Now this valley here, this swing low, this valley, it's lower than the previous valley, and the next valley, it's lower than the previous one. That's called a lower low. Because it's lower than the previous one. And here, why it's called a lower high? Because it's a low, because it's a valley, okay, the lower side, it's higher than the previous one. And the next one, it's higher than the previous one. Here, it's the opposite, okay? The valley, the lower side, it's lower than the previous one. So that means when you see lower highs and lower lows, means that the market goes down. It's in a downtrend, okay? That means we should not long the market. We should not buy when we see lower highs and lower lows. Okay, we should buy if we see lower highs and higher highs, because the market is growing. Okay, and we should sell when we see lower highs and lower low. So I'm gonna put next to it, we buy long the market. I put with green and a bit larger. Okay, and here we sell and short the market. So these are the basics concept. Okay, so a swing, it's the one that starts, a swing high, it's the one that starts from a lower price and end at a higher price. And the swing low, it's the one that starts from a higher price and ends on a lower price. And when it ends and reverse and going up again, it creates what's called a valley. And when it stops the price going higher and it starts going lower, it creates a peak. Yeah, and after that you see what type of swings they are, if they are higher high swings or lower high swings with lower lows. Okay, that way you know if you long the market or you short the market. You know the direction the market it's gonna go. So I hope it was simple enough, and this was the first lesson. And in the next lesson we're gonna learn about levels. But before I want to to end this, I want to also show you on a chart how a valley, how a swing high and a swing low looks like. Okay, I will change, I will go to the chart and we're gonna look for a swing high. Okay, So okay, let's take this swing low from here. So here the price stopped, okay, and it starts to go lower. So it creates a swing low. Here the price has stopped going lower, and from here it starts to going up. So this is a swing high. Okay, now here this is our valley. Let's go a little bit back. Here we have another swing high from this price until on this high here. Here the price stopped, okay, and we have here a swing high, and from here the price start to fall again and create this swing low, but also it created a peak. Okay, so created a peak and a valley. Yeah, so thank you very much for watching this, and we're gonna see again in the next lesson. We're gonna talk about levels. Have a nice day.